Good afternoon, Sifters. It is the week of January 26th, 2026. I'm Tyler Sherven with my co host, Lucas Nulsen. He's filling in for CJ, who had just got married and out in Puerto Rico. And actually, Lucas himself is coming in from Puerto Rico. How was it?
Oh man, great time. Fantastic time in Puerto Rico. Got some sun, spent some amazing time with CJ. It was great. Had an awesome time.
Yeah, I'm sure. Are you happy to be back for the winter storm of the century? They're
I'll
getting some
tell you
Puerto
what,
Rican sunshine.
it was a big change coming from the nice 85 humid weather in Puerto Rico and landing in Chicago, 9 degrees, snow, ice. It was awful, but we're back. We're back in the saddle. Glad to be here. Glad to speak to the fans. So it's good to be back.
Hey, we're happy to have you back. So we're going to jump into it, get in the saddle with how the indexers are doing year to date 2026, and this is based on market close last Friday. So we are seeing the S&P 500 after some volatility is back up at it. We're seeing a year to date return of 0.88%. Other news that we're seeing is the Bloomberg US Aggregate Bond Index just above 0% at 0.08%. So a little bit of volatility in both the bond markets and the stock markets last week in response to the Greenland trade war that certainly created some uncertainty and rattled the investor confidence that in US assets, but much of that is recovered. In the other news with the indexes we're looking at, commodities surged. And this was led by oil's climb above $60 per barrel. And this is driven by escalating tensions that we've been seeing in the news in Iran and also the severe winter storm that is creating a lot more demand for oil. We're also seeing gold continue its historic ascent, hitting an all new all time high, surpassing $5,000 per ounce. So, CJ, I think he got that gold ring. Kira's, I'm sure, going to be pretty happy with the performance of gold. Anywho, we are going to be jumping into our stock of the week. And Lucas, take it away for us on Apple. They are the big kahuna coming up on earnings this week.
That's right. Apple, the name we all know and love. It's been a little bit of an oddball, comparatively speaking, to a lot of the other big names that we've talked about in the past few weeks and months on the show. If you look at a lot of the other big Mag 7 companies, Apple's a little bit different from the others. We've seen a lot of the big tech names like Nvidia, Broadcom, Microsoft, lots of those big names growing, having some pretty spectacular performance, especially over the last 2 or 3 years. But we've seen Apple a little bit more slow and steady, but still one of the biggest companies in the world, actually about in third place right now in overall market cap. Apple kind of sets itself apart a little bit from a lot of those other big names in that they're more focused on branding. They're a lot bigger on consumer technology, things like that. One of the things that Apple's kind of been running into lately is they're experiencing a big slowdown in their financials. Revenues slowed,
Mhm.
financials, overall earnings, net income, really not as strong as it used to be. We're seeing pretty stagnant financials out of Apple really since the pandemic came around. So it'll be one to watch out for here, especially throughout this week, as we have earnings coming up this Thursday, as well as earnings of the other tech names.
Yep.
So it'll be really interesting to see how that company reports this Thursday. Very interesting stuff coming out of Apple. Potentially some big news coming up this week.
Lucas, before this, I think you were mentioning a bit about Apple's like PE ratio versus the other major Magnificent Seven companies. I was curious if you could tie in a little bit more on that.
Yeah, so like I was saying, a lot of the other big tech names, they've seen a lot of growth over the last few years, and that's arguably been pretty well warranted for a lot of these names. We've seen a lot of growth financially out of companies like Google, Microsoft, Meta, Nvidia. Those companies, they trade at a pretty high premium,
Mm.
but you get that earnings growth with it. You get that growth of that business with that price. The big thing with Apple is they're trading at one of the highest valuations historically they've ever traded at. They're sitting at around a 34 PE right now. That's higher than some of the names like Microsoft, Google, Amazon. All three of those have been growing pretty substantially
Mhm.
at a pretty high rate over the last few years. Whereas Apple, they've been really flat. Obviously, Apple is a big consumer name. Everybody knows Apple. Most people in the US, they probably have some type of Apple product in their home. But are they really warranted of holding that 34 PE higher than a lot of those big high growth names?
My
That kind of needs to be seen.
my other question for you, I'd be curious about is you mentioned a lot about the branding, and obviously one of the big things that you're looking at with stocks is switching costs. And I feel that at least particularly in America, and it seems like elsewhere a lot too, there's a huge thing for Apple branding. It looks great. People love it. It's fashionable. And oftentimes, yes, their operating systems are smooth and simple. Do you still think they command that high switching cost that, let's say, competitors like Microsoft and Google have? Do you think that's still like justified in their valuations?
Definitely, most definitely. I think that Apple probably has the highest and best switching costs amongst its competitors. Microsoft might be in a close second. Apple definitely isn't going to lose their spot anytime soon as that top consumer electronic producer.
Mhm.
They're definitely worthy of a higher valuation, but just it can be questionable when it gets up in those 30s. The PE is very high relative to its competitors. Definitely something to watch out for, especially if we see a market downturn, anything like that.
Mhm.
Apple might be a stock to watch out for because it is trading at such a high valuation with very little growth. So something to just keep an eye on for sure.
Got you. Lucas, thanks for diving in, giving us a good look at those valuation. So let's go into Apple, our stock of the week, going a little bit further. It is the historic titan of the consumer tech world. I'm sure probably a lot of you folks right now are listening or watching us on an Apple device. It's, and Lucas mentioned, one of the three largest companies by market cap, and we are going to see their next earnings report this Thursday, January 29th, 2026, after the bell. Now, we've been seeing over the news over the past 10 or 15 years that this was the world's most valuable firm, and a lot has changed this decade. So, this upcoming report is going to give us a critical look at the state of the overall consumer electronics market and not just Apple. So, and this is of course, the powerhouse behind the iPhone, Mac, and iPad, etc. You name it. And the company's not just now, but always facing high expectations as it's shifting at this through this hardware landscape and into this services subscription oriented environment. There's certainly a lot more movement away from the ownership of hardware and into more subscription service features. And of course, AI is the talk of the town this whole decade. So let's go into Apple's core business. So as we left off with AI, Apple is looking to finally address its AI gap with a massive strategic alliance. What's funny about Apple is a lot of us' first experience with some quasi AI was talking to Siri. We used to talk to Siri, hey, put this in my calendar. Hey, call this person and that. Me, myself, I don't even use Siri anymore. It's out there, but they've been long criticized for this stagnation because they were seemed somewhat ahead of the game in this, but Siri has fallen off, of course. And they are partnering with Google. So there was a January 12th announcement. Gemini models are now going to underpin the core of Apple intelligence. And this collaboration is designed to reinvent Siri from the ground up, transforming it from that basic voice assistant that we all knew and loved into a sophisticated Gemini powered agent. And for Apple, the goal is clear: reclaim its status as an innovator by leveraging the world's most advanced foundation models. Now, with the innovation part there, I think that's a little tricky because they're not really the ones leading the innovation in this area. This is Google. Apple has this giant infrastructure, this giant service. Really, they are leaning on the innovation of Google for this. So now let's talk. We hear, Lucas, I'm sure you hear a lot about artificial intelligence. What the heck is artificial intelligence, or specifically a generative AI model. So I want you to think of Gen AI as an AI that creates something new rather than just sorting or identifying things that already exist. So, an example of traditional AI is, think about, Lucas, when you go to the library, how a librarian can find a book for you, right? There's a recognition of patterns. Now, the next step with the generative AI is more so you working with the librarian to do in-depth research on your school project, or an author or an artist that is using what they learn to create a brand new story or paint a picture. So we're looking to generate new patterns. So generative AI is creating new patterns, new stuff. Traditional AI is recognizing patterns. AI is always, in somewhat shape or form, has been around us for the past 50 or so years. It's just really coming into the scope of things now. So Apple is transitioning, doing a big transition from a pure hardware manufacturer into that lifestyle platform, right? So Google, Microsoft, they have transitioned more so toward a subscription with all the services, right? You have Google has a whole scope of items that you can do for your work. Same thing with Microsoft, work and lifestyle. Microsoft and Google have that down. Apple does not necessarily have that down. So, looking at the core business functions outside of AI. So, as Lucas had mentioned, they are that leader in premium hardware. They've been that leader in premium hardware for a long time, and that is their gateway for customers. They design and sell those high end differentiated consumer electronics. When you walking through a park or anywhere and you see somebody using an Apple iPhone or any sort of Apple product, that draws your eye, right? Nobody likes seeing those green messages, unfortunately. They want those blue messages, right, Lucas? They can only contact through the blue messages. But unlike competitors that often sell hardware at a loss to acquire users, Apple actually maintains a reasonable profit margin, about 35% on its devices, with the iPhone, of course, being the cornerstone at about 51% of total revenue. So that high margin services, and then they have the ecosystem lock in, that the next step of their business function. So once a user is in that hardware gateway, Apple's focus is going to shift to that recurring revenue and customer retention. And this services segment is now Apple's fastest growing business, of course. That's where we see everything driving to. And this boasts a huge 74% profit margin, because it's tremendously, like Lucas, would you say it's a lot cheaper to do this than build hardware?
Yeah, those services, they have no inputs. It's just almost purely profit for them. So they want to keep their consumers on their network, boost those profits via those services. They just get that recurring revenue over and over again instead of just relying solely on those iPhone and Mac sales.
Yeah, basically almost the money printer. So they got those big recurring revenue sources. Examples of that are the Apple Music, App Store, iCloud. And again, as we talked about, they have almost the walled garden of on services. We talked about the blue messages, iMessage, the big one. People like the Apple Pay, Fitness Plus, these are only available on Apple devices. And that adds to that high switching cost we talked about, which inevitably goes into their wide mode. And another question I was curious for you, Lucas, was like, what are your thoughts on Apple's like wide mode comparatively to, let's say, Microsoft, Google, or the other big tech names? Do you think that's steady right now? Like, what's your perspective on it?
Oh yeah, I think Apple definitely has the widest moat in terms of consumer electronics. When you look at some of the other names like Google, they have their Google Pixel, as well as the other devices like the earbuds, things like that. A lot of their competitors, they try to compete, but they're just not up to that same level that Apple is. Where I think it creates a little bit of an issue is, yes, moat and high switching costs, they can contribute to a higher valuation, but I still think there is a limit to which that number can go to. Apple, like we talked about, it's trading at around a 33, 34
Hmm.
PE,
Hmm.
but a company that isn't growing, there's a limit to how high that can go. It's certainly worthy of trading at a slight premium for sure with those high switching costs, with that network effect, that major moat that they do have. It's just a little bit concerning, I think, with the valuation that it's currently trading at relative to its peers.
No, I appreciate that, Lucas. And again, folks, for you out there, if you're curious about what a moat is, this is essentially think about it like a castle. The bigger the moat is, like that water defense, right? The harder it is for competitors to break in to that castle that, let's say, Apple has with their services and their hardware. Now, next up on the docket, the top three things to look out for on the upcoming Apple earnings call. And we are very lucky to have Lucas here, one of the smartest guys I know in investments, to give us a hint in on this.
Thanks, Tyler. So, yeah, some of the things that investors are really looking forward to coming up this Thursday for Apple's earnings call. There's a three key things that they're going to look for. First being the sales of the new iPhone, of course. We talked about that earlier. Apple makes up about a total of 50% of their revenue with just the iPhone. So that's the major line of business for them. They make most of their money just from the iPhone. So that's a super important, the entry level into the Apple universe. If you're in the Apple world, you have to have an iPhone. All the other things come next. So that's the big thing that they're looking for, is how are those iPhone sales looking? So back in September, Apple actually released the iPhone 17 Pro, the Pro Max. So it'll be interesting to see how those iPhone sales have gone. Word is that they have been overall pretty successful, but we'll definitely see first report after the holidays. Lots of people get those iPhones as gifts. So it's a good indicator of how well the new iPhone is selling. So we'll definitely be looking forward to seeing how that's gone. The next thing, which we talked a little bit about earlier, is the development of AI, artificial intelligence. Apple really has been late into the world of AI. Like Tyler was saying, we haven't really seen a whole lot of development out of Siri. When it came out in the early 2010s, Siri was the coolest thing. Everybody was using Siri. I loved using Siri. It was fun to
Oh, yeah.
have conversations with Siri. It was like the
Best
new
friend.
great thing. But since then, there's been absolutely zero development. Nothing has changed with Siri since then. And I don't use Siri. I know Tyler doesn't use Siri. I don't think I know anybody that really uses Siri for much of anything.
Which
It's
is
just
absolutely crazy because it was the biggest thing in like the early to mid 2010s. It was
exactly. And it's
revolutionary at that time.
it has so much potential. There's so much stuff that Apple can do with that, and it's been really disappointing, I think. It's been one of the most disappointing things I've really seen out of Apple in the last 10 or 15 years is they've done nothing with this voice command Siri feature that really drew so much attention to that iPhone 4 when it came out.
Mhm.
So really disappointing, but we'll see what happens with this new Gemini partnership.
Yep.
It'll be really interesting to see. We've heard that Google and their Gemini model has been making great strides in the AI game recently, taking the lead as the number one generative AI platform. We'll see how that goes. I'm
Mhm.
definitely pretty confident in that relationship, but it's pretty interesting with kind of the battle that we've seen between Google and Apple recently, the battle between Google and Safari being the main search engine on the iPhone. So
Well,
it'll be
that's my
interesting.
other question for you, Lucas. What is your browser of choice? Are you the
Oh,
Chrome, Safari,
I am
DuckGo?
definitely Google Chrome all the way. Yeah, definitely. Just the network effect that Google
Mhm.
Chrome has. You get all the different apps, you get Gmail, you get the photos, everything just connects on one platform. So I really appreciate being able to use my Google services both on my computer at work, but also on my phone at home. No matter where I am, I have Google TV, so I can log on to any TV in the world and there's my stuff. My account's right there. So I'm really a big fan of Google, and I'm really hoping that this relationship with Gemini and Apple really strengthens the relationship, helps them in the future. I think that this will be a good thing for both companies.
Yep.
So definitely looking forward to that, and I'm really excited to see what comes of this relationship. I think that a revamp with Siri was much needed. We haven't really seen a whole lot of changes recently in terms of really any features out of the new iPhone. So definitely looking forward to that. Historically speaking, Apple is really slow with a lot of the upgrades to their phones. We see a lot of their competitors like the Samsungs, Geminis, a lot of the competitors, they issue and release new features much earlier, usually 2 to 3 years before Apple does.
Mhm.
So it'll be interesting to see how this new AI feature rolls out with Apple. But what I really think is cool about Apple is they take their time with these things. They want to make sure that the new features work correctly and that they don't hurt their brand in any way. They want to take things slow, and they're really much more of a quality over quantity type of company. So
Nice and
they're
steady.
focused on establishing that brand. They're the most valuable brand in the world. So definitely something to keep an eye on for sure, as any big change within Apple is definitely worth noting. Next thing just wanted to cover as well is the Chinese market. That's an area that Apple has had some struggles in, especially recently. That's really something that we've been watching with a lot of companies. Really, since COVID, China's economy has really struggled. They had one of the most stringent lockdowns
Mhm.
throughout COVID in the world. Their country was locked down much longer than many of the other countries in the world, and that really had dramatic impacts on their economy. So the country has been very slow to recover, but we're finally starting to see some recovery out of the country. And we're seeing that really play out in a lot of different firms that we follow here. So, really good to see. And we'll see how this impacts Apple's earnings, of course, especially in that region. But also, China has a lot of phone manufacturers themselves, particularly one of their big manufacturers, Huawei,
Mhm.
and making tremendous strides in the industry. They're issuing some pretty high quality phones that actually have quite a few more features than the iPhones do. So that's been taking a lot of market share in the Chinese market. The third thing is the tariffs, the trade war really between the US and China revamped with the Trump administration back in place. Is we've seen big changes in the phone pricing, especially in the Chinese market.
Mhm.
And I really think that this has had a big impact on the Chinese consumer. It's left a bad taste in their mouth. A lot of the media in both countries has really been focusing more on domestic production, things like that, buy in your own country, things like that. Definitely will be interesting to see how the tariffs and the trade wars impacting the overall sales between the two phone companies. So very will be very interesting to see.
Yeah, and that kind of ties in with a lot of the themes from the latest Davos conference, in which it's really everything's more gravitating more toward deglobalization, domestic production, as tensions across the world are growing. Folks, keep your eye out. Apple earnings this Thursday. We're eager to see how that all plays out. Okay, so Lucas, you hear about that potential partial government shutdown coming up?
But yeah, I've heard. Yeah.
Yep.
Yeah. There's always a government shutdown. It feels like every month.
It's yeah, that's the nature of things this decade, right? U.S. government faces a potential partial shutdown this Friday, January 30th, 2026, and this is a disagreement about how to fund the Department of Homeland Security (DHS). This is due to a Senate deadlock over the DHS funding following the fatal shooting of a U.S. citizen by ICE agents in Minneapolis. Senate Democrats will not approve a $1.2 trillion funding package unless the DHS portion is removed or heavily reformed. Because Senate Republicans need at least 60 votes to pass the bill and only hold 53 seats, they do require Democratic support that currently does not exist. And with the House of Representatives already on recess and a major snowstorm in DC delaying negotiations, there is very little time left to reach a compromise before the weekend deadline. So, buckle up, folks. Right now, Poly Market is seeing a 79% chance of another government shutdown by January 31st, and we're seeing about 76% on Kalshi. Next on our weekly insight here is we're going to go over some of those three big takeaways from the Intel earnings call that had occurred last week. So, first off, we talked about the AI and data center traction. So the what we had discussed there was, is Intel actually gaining ground, and we were going to look out for the demand for those AI and data centers. And the result was more mixed and steady. Intel did beat revenue expectations, 13.7 billion versus 13.4 billion expected, and that was driven largely by the data center and AI group. But they didn't announce any sort of massive AI win that rivals Nvidia's dominance or any of the other the big AI companies, right? The next up is margins and cost control. So we wanted to see whether the margins are stabilizing as Intel restructures. And good news on that there was positive progress. Intel posted a non-GAAP gross margin of almost 38%, which aligns with their recovery targets, though down slightly from the 40% in Q3 2025. So the cost cuts that the CEO Lip Bhutan is doing are currently working. The next up was the foundry progress. Like we talked about, customer commitments do matter more than the near term profits. What we're seeing is a quiet execution, no blockbuster new customer announcements on this recent call, but the Intel did confirm that they are on track with their 18A process node, their most advanced manufacturing technology. And the foundry business revenue did actually dip a bit in Q4 due to what they had termed a challenging environment. So again, what we had mentioned last week, that this is indeed a long game for Intel. Overall was a largely muted flat earnings call. So even though they did beat earnings estimates, there was weak guidance from Intel that dampened enthusiasm. And we saw the stock price react with double digit drops with that weakened guidance. So investors are still waiting on definitive proof and more enthusiasm going forward on whether those foundry bets are going to pay off for Intel. And the other thing with earnings is that there's also not just Apple, there's some other big earnings coming up. And I was curious to hear, Lucas, your perspective on, let's say, Exxon, Chevron, some of the big oil firms that are coming up on these earnings calls this week.
Oh, yeah. Big earnings reports coming up this week for the big oil companies, Chevron, Exxon, a few others. Obviously, we've talked about this on the podcast quite a few times. Lots of changes in the oil industry over the last few months. There's been, of course, that big stir up in Venezuela a few weeks ago with Nicolas Maduro getting ousted from power.
Mhm.
So it'll be interesting to see how these oil CEOs, some of the oil and gas CEOs, talk about the future in terms of investment in the energy sector. We're seeing some pretty low oil prices overall. Earlier, we did see that surge last week, a little over 5% in crude oil. But the week before, we were seeing crude oil prices in the mid 50s. That's pretty low relative to how it's been over the last 4 or 5 years. And what we've heard in the past from a lot of these energy CEOs is that they can be profitable down to 40 or even $35 a barrel, but that kind of remains to be seen.
Yep.
This big drop in oil and crude prices we've really seen a big drop in overall spending by these companies. Very minimal capital expenditure spending, not a lot of investments in their infrastructure. There just really isn't that incentive in terms of profits to go and start a whole bunch of new projects when oil prices are already so low. And really, futures prices, crude future prices, are pointing to even slightly to flat prices into the future. So it'll be really interesting to see how these CEOs kind of word their futures, what's in store for the next 12 months, and really what's going to happen, especially down there in Venezuela. What are some of the investments that are going on down there? It'll be really interesting to see how that kind of impacts overall crude prices too.
Lucas, would it be like Chevron has or had the most oil facilities in already based in Venezuela? Is that correct?
That's correct. So, what's really interesting about Venezuela and their oil reserves, of course, they have some of the largest oil reserves in the world. What creates a little bit of an issue is that different countries, different regions of the world have different types of oil. The oil that comes out of the ground comes out at different consistencies. Some oil is cleaner than others, but the oil coming out of Venezuela is not the same that you see coming out of places like Texas, Alaska, Canada, places like that. It takes a very special process to refine the oil coming out of Venezuela, and Chevron is really the only company, or at least the main company, that has the technological capability to refine this oil. So it'll be interesting to see how Chevron steps up to the plate with this, if and when they're able to do this, and if any other companies want to come in and collaborate. I know there's already been some talk with President Trump and some of the other leaders of these oil companies. So I'm assuming we'll be hearing some announcements in the coming weeks out of the White House and some of these energy firms, most definitely.
Yep. We'll be eager to see how the earnings calls plays out for those companies. Appreciate Lucas giving us all that insight on that. Next up on the Fed Watch. Right now we're seeing the CME Fed Watch 97% odds of interest rates holding at 3.75% on this upcoming Fed meeting Wednesday, January 28th, 2026. Just make sure if you're tuning into it, watch out for Powell's tone on 2026 inflation. Poll question. Which company do you think is most likely to come off the top 10 S&P 500 holdings in 10 years? First is Nvidia, second is Apple, third Microsoft, fourth Amazon. I'm curious though, Lucas, who do you think is coming off that list? Who do you think is most likely to come off that list 10 years from now?
Love those four. Those are some pretty fantastic names. If I had to pick one, I'd probably say Apple.
I'm
Even
on
though
board with you there. Yep.
simply just the growth, we're expecting to see lots of growth out of those other three names into the coming years. It just remains to be seen what Apple's next new thing is going to be.
Yep.
We've had the iPhone for many years now. What is Apple's next new product? That kind of remains to be seen. What's going to push them to that next level? I don't really know what that is yet. I could be wrong. I could be really wrong. The other three could be removed from the top 10. You never know.
So you're to that next innovative thing Tim Cook has to do, resuscitate Steve Jobs some way, somehow.
He might have to do that. That might be the only way, but we'll see. A lot can change for sure.
100%. For all you folks out there listening, watching, let us know. Let us know what you think. Give us your reasoning. Curious to hear from you. Now, going into last week's poll results, which semiconductor stock will perform best in 2026? And Intel led the way with 50% of the vote. And we wanted to feature a YouTube comment from Sketchy7306. The only way Intel can compete in AI is if they magically increase their production, which I don't see it being anywhere near AMD. That's a different question because their chips performance is way better with better consumption results when compared to what Intel has to offer. As of now, Nvidia is still miles ahead. Oh, because what do you think about that YouTuber there? Is a
Yeah,
perspective on it?
I think I happen to agree with Mr. Sketchy 7306. I think that Intel is they're one of the dinosaurs in the industry. I'm upset to see the US government continue to bail out these old dinosaur companies. So I definitely am a bigger fan of companies like AMD, Nvidia going out and changing the world, changing the game.
Mhm.
I don't think that we should continue to reward companies for complacency, being behind. I
100
think
agree. Yeah.
Oh yeah, I think that kind of just goes against a lot of the American values and the capitalist values that we have in this country. So I think we should focus on the new and the great companies that we have here starting in the US.
So, Lucas, can you round us up for a quote of the week?
But yeah, love the quotes. So this week's quote is by the late and former Apple CEO, Steve Jobs. Everybody knows Steve Jobs. Innovation distinguishes between a leader and a follower. I think that's just such a great quote. Definitely something I think we live by here at Seed. And we definitely miss Steve Jobs. He built one of the greatest companies ever, maybe the greatest company ever to date.
Yeah.
So we definitely miss Steve Jobs and lots of the things that he created for Apple and the world.
Thank you for listening to this podcast. We're going to conclude it here. Again, get out there, get innovative, and Lucas said, get back in the saddle, take it on.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal.